Okay, guys, so welcome to another video. It's just me talking, and I think it's been over 6 months that I've posted on this channel, and the reason is just that I've been trying to refine my edge, and I'm dealing with unexpected rules and setbacks in the prop firm industry. Mind you, whenever I say prop firm industry, I'm talking about GFT in particular. So GFT has shown me a lot and they have also taught me patience because you have to be patient whenever you're dealing with um any kind of prop firm because I went from thinking that I'd pass an account in a month to filling accounts back to back and losing trades that I didn't even think I could lose due to spreads, slippage, and all of that stuff. So in trying to reduce my losses and remove excuses like the GFT industry, whatever, so I've patiently put together a strategy that would help me navigate my way with prop firms because now I can only afford prop firms because I'll talk about that later, but I can only afford prop firms now. And it's not the strategy that I came up with is not something totally new. It's just basically me refining my already existing strategy. So this is like second week of June, but I started implementing my strategy on the last week of May. Yeah, so the last week of May, and immediately we got into June. So the first week was the week where I passed this trade, where I got this trade and this trade, and these two trades made me pass the two 10K pay later accounts that was given to me by GFT. Right, so I will explain these trades. Right. So on the 4 hour, I saw this swing. I'm a trend-based trader. I trade following trends and structure markets, right? So this was a swing on the 4 hour time frame where price has broken structure to the upside. So I took optimal trade entry here and I used Fibonacci for my take profit. So this I was already down on the first 10K pay later account. I think I was down $200. The account was at 9,800 or 9,700. I can't remember. But I think I should be able to show you guys um where the account was. Maybe I'll pop it on the screen. So this is a 5 hour trade normally. So I left it to run. I posted on my Telegram channel that I just because it's a pay later account, I'm not going to be trading it with much aggressiveness that I use on my normal accounts. So I left it to run up until somewhere around here where I took profit because I remember I took profit of this trade and this trade too around the same time. Right. So I left this one. Price got to this place. I left it to run because I had maybe like $100 or $50 remaining to get to the 4% target profit of the pay later account. So I left it to run, and that was basically it for this one account. I traded this on one account and this on the second account. This second account was down just probably like $100. So I didn't check the 4 hour time frame for this one. I just used the 1 hour time frame. So can you see? So price is moving up already. So we're in a bullish trend. So I saw this break of market structure here, and I entered also again with optimal trade entry. So at first, I didn't want the market to leave me. I didn't want to have a missed trade. So I entered one entry here, risking 1%. I risked 1% each for this trade. So I entered here. So when I saw price coming down, I took another account here, making another entry here, making two entries for the second account. So once price got somewhere around here, I took profits. Like I closed all my trades because I had already gotten to the target profit, right? So I'll be popping up screenshots for everything I'm saying. And so now I've done my KYC verification, and I feel like there's a problem now because the accounts I have to pay for them. They're $118 each. But the $118 is not the issue right now because at least I can pay for one. If I can pay for both at the same time, I can pay for one. But the rules of the evaluation phase is different from the rules of the funded phase. So once you're funded, you need to meet consistency rule. Now there's a 3% trailing drawdown daily. So the overall drawdown is like 6% trailing. So those rules are new to me, and I don't want to go into something new to me with that large amount of money. That it's not like I have $118 just laying around that I'll use. It's money that I worked for. Like, do you understand? So it's a little bit too much that I can risk, I can afford to risk right now. So I'd rather buy a new 5K account and try my strategy on it than paying $118 for an account that has that much rules. And any account that any prop firm that you are trading that has a consistency rule, I feel like they're just bullshit. Pardon my language, they're just BS. So that's just the update. I passed the two accounts, and I feel like I'm going to buy a new 5K account, and then I'm going to make that into a series where I'll be posting. I don't really like posting anything just anytime, or like say I'm posting weekly. I don't really buy that idea. I want to be posting when there is something meaningful to post about, maybe like a what do I call it? Like I've made progress. Yeah, so whenever I've made progress, I'll be posting videos for the 5K challenge account and probably other things. So, pending the time that I'll be working on those videos or before I post videos, I'll always be active on my Telegram channel. You guys are welcome to join the channel. It's public and free for all. So you can follow up my trading and learn one or two. So that's just all for this video, and see you in the next one, guys.